In this video, I'm going to break down ICT's breaker blocks. Yeah, I said that right. So now let's talk about the basic theory of breaker blocks. So this is method 1, as you can see there. And what we're looking for is we're looking for a low, we're looking for a high, and we're looking for a sweep of this low, right? So let's get our labels, put that here, put that there. So we've got a low, we've got a high. Now we're waiting for price to go and break this low, which it does there, and enter a support level. Now this previous support level could be an old fair value gap, it could be an old swing low, or it could be an old order block. Basically some sort of level that has some significance. We want to see price get into that, and then we can start looking for a breaker block. Now method 2 is far easier, and it's probably something that happens more often than not. What we have is a low, as we saw before. We have a high after that, so let me just label this a high there, and then we have sell side liquidity resting below this low. If you haven't seen my liquidity video, check it out right now, it's a must watch. So we have a low and then sell side liquidity, so as price comes and takes out all the people buying early, then we can look for our breaker block. So now let's look at what a bullish breaker is. Basically a breaker block in a bullish scenario. So as we saw before, we had this low, we had this high, and we had this low. So we wanted to see a sweep of this low, so sell side liquidity get taken out all into a support level. Then what we want to see is we want to see price go up and break this high. Remember, we had a low, a high, and a low. We want to see this high get taken out now, and that is what sets up the breaker block. So as price goes up and breaks this, and we have a break in market structure, then we can take our rectangle tool and draw a bullish breaker, which I'll show you examples of, so don't worry about that. Now if we reverse the roles and see a bearish breaker, it's pretty much the same thing. We have a low, we have a high, we have this other high that was taken out. There was buy side liquidity over this, right? We go up, take out all the early sellers, and then we're looking for a break in market structure, which we have right there. After we have that break in market structure, we can get our rectangle tool out and be able to draw our bearish breaker block. That is such a tongue twister. Our bearish breaker block, and we want to see price return to it, then we can sell and target previous sell side liquidity. If the video is helping you out so far, then make sure to click the like button and subscribe for more content just like this. Thank you guys so much. But now enough of theory, let's get into the nitty gritty and show some real life examples of this bearish breaker block and bullish breaker block. You guys have got to give me credit, these words are so hard to pronounce. Here's our first example of a bearish breaker. Now I'm just going to show you what I'm seeing right now, and then we'll look at the actual example. So this diagram that I've drawn right here is exactly what I'm seeing in this piece of price action. So let me just highlight the area we're looking at, which is this area. So for a bearish breaker, what we want to see a sweep of buy side liquidity. That is exactly what we have right here. We have these equal highs. Let me just get a line out and draw it. We have these equal highs, and look what happens. Price goes up, takes that out, so our condition is met. And then we want to see a break in market structure. We have this swing low right here. This is that break. We get down, sellers kick in, and we go down, have a break in market structure. And now we can get our rectangle tool out and draw the bearish breaker block. And the way we draw that is we look at that last candle, or we can look at the series of candles, the down candles. In a bearish breaker, we're looking at down candles. In a bullish breaker, we're looking at up candles. So after we have that break in market structure, we can get our rectangle tool out, draw it up here, and extend it. And for a bearish breaker, I'll make it red. I'll just there. That would be our bearish breaker. We could have our entry somewhere there, stop loss above this breaker block, and then targeting this sell side liquidity or wherever we're targeting. But that's a video for another day. Seriously encourage you guys to go through your own examples, collect data, because it's going to give you so much more confidence in, you know, the concepts working, because ICT can say these concepts, but it's up to you to actually go and implement them. And I feel like if you don't implement them, then you just won't understand and you'll feel like it's a gimmick. Now let's look at a bullish breaker, and the price action that we're going to be looking at is this area right there. And I'll make it yellow just so it's easier to see. So this is the area we'll be focusing on. And now what I'm showing you here is we're looking at this, we come down, we go up. So we have a low and we have this potential high. Then the sell side liquidity resting below this. We come down, we take it out. So basically what we have is this low, high, the sell side liquidity underneath here, which is basically this. We take that out and then we break this market structure right there. So I can draw that break in market structure like this. That's our break in market structure. So now in a bullish breaker, we're looking for the last bullish candle, which is this. We can draw it there, extend it out in time. There. That will be the bullish breaker block. We could have our entry there and target wherever, buy side liquidity. Now let's look at a third example, which is going to be a bearish breaker block instead of a bullish one. So this is the area of price action I'm looking at. Now just maybe pause the video for a second or two and see if you can actually see the bearish breaker block. Okay, so if you haven't noticed it, I'm going to show you right now, right there. This is the price action I'm looking at, and I'm going to walk you through it. So as you can see, we have this high there, which can get swept, and also this little high right there. So we go up, we pull back for a second, and then we sweep it. So we have that high, the low, and the high. So now we're looking for this low to get taken out, which it does right there, you could say. That could be the break in market structure right there. That could be our break in market structure. And then in a bearish breaker, we're looking for the last bearish candle. So in this break in market structure, where is the last bearish candle? It's right there. So we could look at this, extend it out in time, and that will be the bearish breaker block. Make it red again right there. That would be the bearish breaker block, and our entry could be somewhere there, right on the edge. Keeping a tight stop loss probably not a great idea, whatever your risk parameters allow you for, but let's say above the swing high, and you could target previous sell side liquidity. So that is the breaker block in a nutshell. So I hope you've understood breaker blocks and how exactly you could use them in the market. I encourage you to look at your own examples, back test, and collect data, as it's going to help you in the long run. That's all that needs to be said. I will see you guys next Saturday. Happy trading, guys.